morning, and thanks so much for tuning into the Trade Setup. I'm Neeraj Shah, and it's Tuesday morning, and it's a lot more placid than what it looked like yesterday morning. So the US markets have snapped their 5-day losing streak and ended the day with marginal gains, if you will. Nothing's, I mean, you could argue spectacular, but in the light of what's happened, really nothing quite spectacular. So pretty par for the course, the kind of an upmove that's happened. And why do I say this? Is because, I mean, otherwise, usually a 5-day fall, which is steeper, 2-3%, 4%, might worry people. But this chart on the Bloomberg terminal, which shows how the US markets or the S&P 500, for example, has tumbled 3% on multiple occasions this year. So the last week, the 5-day down move that we've had is no great shakes. We've had worse than that moves for 4 or 5 days from which the market has recovered. And I believe that's what people believe largely that the template would have been by the dips. Remember, that's largely been the constraint. In fact, our markets didn't even show too much of a corrective move in yesterday's session. And we'll come to that in a moment. But yeah, this was something. I mean, things really haven't gotten bad yet for the S&P 500 or for that matter our markets as well. Remember the DSP chart that we did in our video about when the markets will correct? We haven't had more than a 10% drawdown since the start of this up move from March 23rd, 2020. Quite a telling statistic, I might add. Asia's having a half decent day, so not bad. Actually, Japanese shares since the new leadership it was evident that there's going to be a new leadership. I've actually done reasonably okay, but in today's session, early morning, Nikkei is up in the green. The others are flattish, maybe marginally lower, but nothing too untoward. Let me put it that way. The SGX Nifty will come up on your screen next, and let's just see what that is indicating. Well, a start above key resistance levels, which is, well, let's wait and watch. Frankly, the levels of the SGX Nifty don't matter as much. It's just maybe a mood barometer, if you will. Now, I must point out that in yesterday's session as well, despite the fact that we had a corrective move, the market breadth, or not a corrective move really, but an end in the red for the Nifty and the Sensex, the broader markets actually did very well. So 2 days or 3 days on a trot now, we've had fairly positive market breadth, which is pretty good. And even on a day like this, yesterday, which was flattish to marginally lower, you had a bunch of stocks doing really well. Look at this. The top 16 gainers on the NSE 500 had gains northwards of 5%. The top, except for the top 2 or 3 losers, and one of them was unfortunate, Aegis Logistics, because of the demise, sad demise really. But aside of that, we didn't have too many deep gashes in trade yesterday. So that's the key point about the trading session in trade yesterday. Pretty stable going. Now, I think the global mood will aid the index. The key resistance levels, when I was reading the notes of a few technical experts who I have regard for, said that 17,370, 400 would be the key levels of resistance for an intraday basis. And I reckon we'll probably eclipse that at the start itself, maybe. So let's wait and watch if indeed that happens. And therefore, do we move towards that 17,500 level, which I think Gautam Shah of Goldilocks also mentioned was a key resistance levels. And if we break that, then we are headed higher. So let's wait and watch if all of that happens during the course of the next few days or today. Local dealer desks that I spoke to were bullish on specialty chemicals, and it showed in the session yesterday. Real estate, and it didn't show in the session yesterday, so to say, and select pharma stocks in the near term. Remember, there's also this recommendation for the API duties to be tinkered with, because Chinese API is creating havoc of sorts for the Indian pharma. I think I saw a tweet from one of the pharma companies as well about how there needs to be some urgent intervention by the government. So let's wait and watch. Maybe pharmaceuticals has some triggers in the near term. And I reckon that commodities could continue to outperform in the session today. Remember, yesterday, metal index was the best performing index. I won't be surprised if there is a bit of repetition of the mood in trade today as well. Look at this chart, for example. Commodities had a brief lull maybe, but I think post that, there has been a significant bounce. So I know the WhatsApp groups and WhatsApp messages are flooded with what's happening to aluminum and alumina. But look at this chart. It's a part of a BloombergQuint story or a Bloomberg story, which is there on our platform, our website, BloombergQuint.com as well. The chart maybe will come up on your screen next. I don't know. Maybe it does, maybe it doesn't. But the point being, There's this chart which shows how the gauge of the commodities index has again moved higher and is trading close to some 10-year highs or thereabouts. So pretty strong show by that. And Goldman Sachs comment on commodities. Okay, we got on the chart, yes. So this is the chart, right? This is the highest in 10 years, raw material spot prices, and therefore this is not just aluminum, etc. I think oil too is inched up a little bit overnight session. So all commodity linked stocks could actually do well. Look at this Goldman Sachs comment on commodities. They are saying that physical goods demand has reached the highest, levels in a number of years, above pre-pandemic trends in all but oil. That the system is becoming increasingly constrained in its ability to supply these goods. And they're saying that the markets are becoming increasingly exposed to any type of supply disruption or unexpected demand increase. And by the way, viewers, we already experienced enough and more supply disruption. Can we experience unexpected demand increases because of this whole capex boom that the world seems to be in the midst of? That's the thing you have to safeguard yourself against. And let's see, Nalco, Hindalco, etc. are all active yesterday. Maybe there could be more in store for some of the base metal stocks. By the way, speaking of metal stocks, commodity stocks rather, remember that JSPL, the Australian arm, has started operations, and therefore that could be active. And with oil surging the way it has, I think ONGC and Oil India too could be in focus. So those are a few names that you should keep at the back of your mind. What are the stocks to watch? I think Z Entertainment, the principal one. It's a big thing, right? Two independent directors, one of them being Manish Chokhani, have resigned from the Z board at the behest of institutional investors. I think there was a large move or a large request or a large recommendation or activism done. And as a result of which this has happened, wonder what will happen to Puneet Goenka. But, you know, I thought it's best to get you the brokerage comment, and one of them that came out early morning, I've just used that. I think a bunch of other brokerages will also come out with their notes. But Daulat Capital or Dart Research says this on this move yesterday, that irrespective of whether Puneet Goenka resigns or not as MD and CEO, and they believe that him resigning as director seems inevitable, the P multiple will still get upgraded. Activism by large shareholder is welcome. They expect the stock to react significantly positively. Now, will it happen? I don't know, but I think most quarters would believe that this is institutional activism which is possibly helping minority shareholders in whichever shape or form. And I think the last few months have shown that whenever there is shareholder activism leading to a move, whether it is capping of salaries, whether it is not just salary, but all forms of remuneration, whether it is this or something else. There have now been 6 or 7 instances in the recent 3 months that I can't think of at the back of my hand right now, but I know on the back of count that I had done last week, that multiple such instances have happened, right? iShares, Balaji, etc. So just keep an eye out for Z Entertainment today. It could react very positively. All Cargo has dropped the plans to delist. Again, I think this is on the back of feedback received, and therefore both All Cargo and Gati remain in focus. Let's see if uh, uh, there's a lot of conversation around how Gati might get impacted very positively, because all cargo dealers and the promoters focus will be on only one listed entity, which is Gati. Now, all of this was, not necessarily a fact, but a belief that some people have, and beliefs getting cracked don't necessarily at times lead to very large exaggerated moves. But watch out for both all cargo and Gati today. Import duty on palm oil, soybean, and sunflower oils have been cut. So Marico, HUL, Godrej Agrovet, all of them remain in focus today. The the really interesting thing is the flip flop done by the exchanges, right? And I can only use that term. I'm sure there are legitimate reasons and reasons backed with data which lead the exchanges to do this, but move stocks out of ASM or T2T to ASM3 for one day and then bring them back. I mean, this is something I've never seen. ASM is anyways a new phenomenon, but still, this is, so a lot of people found it quite amusing, if you will. That's the word that I can use. But all of these stocks remain in focus. Some of these had reacted because they were going to get out of T2T for 2 or 3 days in a row. Now that they are back in T2T and one doesn't know whether and when will come out again, maybe some bit of a negative reaction could be anticipated. Praj was, remember, up 2 days on a trot, 5%, and yesterday's session about 1%. Let's see if it reverses some of the gains. Some other stocks and news. It's a small, tiny tune, 71 crore company, RSS Infrastructure, but SBI has filed a petition alleging a 2,273 crore payment default, that they have sought initiation of corporate insolvency resolution process, I believe under IBC. Let's sit and watch what's the impact on ARSS Infra. Ramkrishna Forgings, promoter Nilesh Jalan has bought 5,000 shares. Normally, I don't bring out 5,000 shares. I mean, it's not a very large amount, but I think I've seen consistent buying pattern in RK Forging. So therefore, do watch out for that one. Some other stocks which you should keep an eye out for. I haven't given graphics for them, but I think Hindu Business Line yesterday reported that India might get exclusive rights to sell basmati. So Dawat, KRBL, etc. could be in focus. IDFC Limited has this board meet that most people know about, but 9:30, I think that's the board meet. So could something material come out of that? So that's something you got to watch out for. And there's a Godari Power board meet on bonus issue and stock split. So watch out for that stock too. Last but not the least, something that I don't usually do, but I just thought I had to do it today. There is a WhatsApp doing the rounds of how the GST Fitment Committee recommendation has given recommendations for a cut in duty for APIs, for air coolers, for newsprint, etc. A lot of people said, oh, a lot of these stocks, the Symphonies, TNPLs, etc., would react positively. It did not necessarily happen. A lot of recommendations get made. Some get passed, some don't. So if you are a brave heart and you want to preempt something and go out and trade them, great. But otherwise, just be careful if you get WhatsApp forwards asking you to trade into a Symphony, into this, because it's a recommendation and therefore it's a done deal. Please be mindful of that. That's the limited point I'm trying to make, because a lot of forwards are going ahead with those images which say that these recommendations have happened, and then the message attached saying that these stocks will react positively. Doesn't usually happen that way. Thanks so much for tuning into the Trade Setup today. Have a safe, profitable day ahead. And if you're stepping out, please stay masked up.